Hey everyone, I hope you're having a great weekend. This is your market snapshot for May 25th, 2024. So last week in the S&Ps, they basically finished zero or flat for the week. Started Monday right here, and we traded flat and ended Monday in roughly the same place. The QQQs actually finished up a little bit. We actually started Monday right here and ended up higher. The IWM actually finished lower, which is not a good sign because the IWM normally kind of leads the market, but they have been lagging all year. But they actually started right here on Monday and closed lower. So here's SPY 7-day 0%. The Qs up roughly 1.3, and IWM down 1.27. And if we kind of want to run through what happened, SPY has been trading in this very tight range for about the last week and a half now. Once we hit the new highs, which would have been a week ago Thursday, it stayed in this very tight range here. It wasn't until Wednesday when they had the FOMC minutes were released. In those minutes, there was actually talk of possibly even thinking that the rate cuts wasn't doing enough and possibly raising them instead of holding steady. And that caused the market to drop pretty good on Wednesday after about 2 o'clock. The FOMC chairman Powell came out and said that we're definitely not raising rates. That kind of helped the market rally a little bit. At the end of the day, NVIDIA announced earnings, and they had a good earnings announcement, and that basically caused them to move up after hours. And in turn, that brought up both the S&P and the NASDAQ because they're heavily weighted towards that. The IWM is all equal weighted, so it only holds like 0.5% that it can control there, whereas in the S&P and the NASDAQ, it's pretty big. It's like 5 or 10% or more. So NVIDIA was basically able to kind of move the market up or down. And we actually opened Thursday morning up higher, immediately pulled back, and we pulled back into basically this trend line right here. And then I want to say Friday, probably what I feel happened was just a kind of dip buyers buying in here. Everybody gets really, I feel overconfident in NVIDIA and their ability to keep carrying the market, even though they have been doing it for a while. I just feel eventually it's going to stop. All this AI news. If you follow any news related with AI, there's actually been a lot of talk that eventually you're going to hit a wall, and you're not going to get any more. It's not going to get any better. And I'm actually just finding that just using ChatGPT. I've been using it for about a year and a half now, and to be honest with you, while it still works exceptionally well for me and everything I do, ChatGPT as a whole, I feel, it's not as helpful as it was. It seems every update, I'm noticing that it does less and less, and that may be actually the ChatGPT themselves and not the actual AI portion of it. But I am finding that it's kind of wanting to do less and less for me when I use it. So if we want to look at maybe some cash secure put type candidates, this is actually my Thinkorswim put optimizer that I have on the Patreon. And if you want to, you can actually pause this right now because this will actually show you. We have actual strikes here that you can sell. These are all puts. Roughly, we went to the July 19th expiration, which is 55 days out. We're looking strikes at least 4% out of the money or greater. And we have a lot of data here. We have the last price from Friday's high, the 52-week high and low, the percent change. If the stock pays a dividend, we have the yield right here listed. Obviously, expiration. So this is the strike that it has chosen for us, at least 4% out of the money. The bid ask of that strike to let us know just kind of how tight the spread is there. The actual return on capital of this trade here and then that same trade annualized. And then this just tells us 4% out of the money. There's the put listed again, days to expiration. This is going to tell us what delta that option contract is, and then the implied volatility of the actual stock, the RSI, which is going to tell if it's overbought or oversold. Anything above 70 is considered overbought. Anything below 30 is oversold. IV percent is just the IV percentile. So actually, if we go into Thinkorswim, go in the trade tab here under option statistics, IV percentile is 3%. This is the cash required to handle the cash secured put. Your cost basis roughly if you were to get assigned, and then the discount, which is how much cheaper you're getting it from today's price. So this is 4% out of the money. You know, if you want to go to like say 6%, it's going to find more. And this is all pulling data from Thinkorswim. So the sheets that I use that pull data from Thinkorswim, we can get a lot more data there. So you can pause this now. This is 6% out of the money. And then this is the S&P 500 stocks that only have weekly options contracts. So basically everything up here you see is roughly the same, except for we have earnings listed. And if it says 30 days, that just means it's at least greater than 30 days away. This indicator will only show from 1 to 30 days. And this is actually trading days, not calendar days. So if it shows 7 days, 6 days, that's basically going to be a Monday through a Friday and then a Monday. So it does not count for Saturdays and Sundays. And then we still have the RSI and the IV percent here. And we can tell that there's a number of stocks that are, the RSI is low. And I have it highlighted, so if it's below 40, it's light blue. It's below 30, it's dark blue. And it does the same thing for above 70, I believe. I think we have light red. I don't think I have any dark reds in here, no. And this is going to be the same July expiration, strikes 5% out of the money. And we can just see, you know, like one that I noticed in here that seemed Comcast here. So the IV percentile is roughly 85. So the IV is actually very high in Comcast at the moment. I'm not really sure why. It is getting close to oversold though. It's at 40. And it's pulling up to 35 strike. And we can see that the 52-week low is actually 38.50. The only downside is the annualized return is only about 4.5%. But like I say, you can just pause this video here and you may see something. I will scroll down very slowly. They are all in alphabetical order. So here's Google right here. And with weekly expirations in the S&P 500, only about 200 and let's see, it's roughly 231 is what it pulls up. At the very bottom here, I have a few. We have SPY, IWM, QQQ, and the VIX. I just added those at the bottom. And then I have spots here where you could add actually your own stock if you wanted to. So even though Apple is already shown, I'll just show you. Just type in Apple here, and it'll pull up that information for Apple for you. So you could add your own stocks down here if you wanted to. This is high-low. Basically, this is just going to be your stocks. The stock's doing the best and the stock's doing the worst in the S&P. So what I like to do is just highlight this column right here. Data. Then I want to sort it. High to low. And then we'll go to this column right here. We're going to go to data and sort again. Low to high. So this is going to tell us, you know, what the best performers were yesterday in the S&P 500 and the worst that have weekly options. So this is basically just the same group of stocks, just, you know, this is high to low, where this one here is low to high. So just let you makes it so you can just look really fast and tell, what's doing good, what's doing bad. It does not list actual contracts. You can go back to the weeklies, find that same stock for the contracts. So, yesterday looks like Intuit did the worst yesterday at down 8. And then CNC was the next. The VIX here, we're not really going to worry about it. But if we want to go to Intuit and look at it, and it's actually not pulling up a contract. And so that may be because it doesn't have a 575 strike. So we'll look, this is actually good because we can kind of show you how to edit this stuff. So they're doing their strikes roughly every 10 points. So we can change this. What we'll do is click on the put right here. And this 5 basically just gives us a strike every 5 points. We'll change this to 10. So now what that did, that brought up the 570 strike here. It's 1% return on capital and roughly 7% annualized. So, doing this trade, as long as you don't get exercised, you're going to earn better than basically just bonds with just paying 5%. So anyway, thanks for watching. Hopefully this was helpful and have a great day. Bye.